Well, good afternoon. My name is Steve Sino. I'm coming to you from honeymoon capital of Canada, Niagara Falls. I guess it might be morning for some of you. It's just welcome you to our session on the Charities File, Fundraising Learning by Example. This is a webinar on the fundraising activity planning model. The Charities File initiative is one of the partnership agreements or partnership programs that was funded by Revenue Canada. We are now into the third generation of the Charities File initiatives, and our website is looks like this. We have all of the materials that we've had from the previous initiatives as part of this. Now, what are we going to be doing today? Basically, I want to look at the flow of the workshop. The first 6 or 7 slides will look at the context within which we want to look at the fundraising planning processes. So we need to pull up some of these elements, all of which reference to CRA's new guidance on fundraising document that was kind of formally released in 2009. And so we'll pull some of the elements there. And there are some references to resources that connect to key themes in this planning document. The second part will really look at the early phases of planning. So slides 9 to 15 will focus a lot around the kind of the first 2 or 3 phases of planning. So that and there's some worksheets there from the Improving Fundraising Effectiveness material that I identified earlier that will help you hopefully to be more strategic about the planning processes in deciding what activities you're going to do and making sure that you really evaluate all of the components related to any fundraising activity that you're choosing. And the third part of this, slides 16 to 24, is more on the doing part. Now that we've kind of planned and we've decided that these are the fundraising activities that we're going to do for the fiscal year, then this is more focused around the actual assigning tasks, procuring, and the evaluating and reporting processes that are required as part of the full planning process. So, as I mentioned earlier, the Charities File, the main workshop that we provide is something called Learning by Example. We really look at all of the elements of the fundraising guidance document, and we try and develop some scenarios so that people can understand fairly clearly the different elements by the examples that are provided in the resource document. This is a joint project of Carleton University, the Center for the Voluntary Sector Research and Development, and again, they've been the lead for all 3 generations of the Charities File project, and the Community Sector Council of Newfoundland and Labrador. And this particular, the work in Newfoundland and Labrador has much more of a clinical perspective. So we kind of blended both of those elements in terms of this workshop. So the focus of this particular session, we want to reinforce that this is just general information and is not considered to be advice. I am not a CRA employee. All of the materials that we developed, we've had to vet through CRA, but we always recommend that if a charity would like to get specific information, especially around some nuance or concern that they have, that you really should contact a representative at CRA to make sure that you explain your situation fully and you get the advice from those from the staff members there in terms of directions you should go in. This is also not a how to fundraise, although this planning cycle really does focus a little bit more on the planning process is really critical to that. Now, getting to the document itself, the document that was released in 2009 was designed to provide charities with some very specific information to help them with their fundraising practices. I know that I've been involved with 14 or 15 workshops in Southern Ontario, and And what I found is, less than 10% of the attendees of these workshops have actually read this document. And so it really provides a great summary of kind of the compliance issues related to fundraising. And so what it looks at, first of all, is distinguishing between fundraising and other expenditures. A lot of the language on CRA's policies, especially around fundraising or things like money directed towards administration or management, there's a main theme that CRA is very concerned with the way charities expend their money, much more concerned with expenditures than actually revenues, because charities really need to ensure that they're expending most of their resources towards their charitable programs and charitable activities. So how you spend money is really critical. So knowing what is fundraising and what isn't fundraising is a core to this particular document. Then secondly, how do we allocate those expenditures for reporting on the 3010? And dealing with activities that might have more than one purpose. There are a couple of guidelines in there called substantially all and the four-part test and the four-part test exemption, which we won't get into in any detail, but they really provide charities with some direction on how you could look at, say, a fundraising activity, and if you are doing an activity that has more program focus, that you might be able to integrate some fundraising elements into that activity that's more program focused and not allocate all of those expenses as fundraising expenses. So there's a fair number of examples that will help charities with that. This fourth and fifth button are really critical. This document really looks at how CRA assesses what they call acceptable fundraising practices. They provide examples of best practices that we'll reference later, and they also clearly identify areas that may result in sanctions or penalties or revocations. So they try to identify practices for charities to be very conscious of, so that that all their activities are within the compliance regulations of CRA. The last part of this document looks at information around receipting. We know that receipting is a challenge for a lot of charities. In fact, when I do a lot of workshops, we could spend the whole workshop just simply on receipting scenarios and making sure that people are receipting properly. Mark Bloomberg has a great resource that he developed which identifies 19 or 20 major receipting errors that charities tend to make. Mark is one of the partnership groups. He's a charity lawyer in Toronto, and it's called CLIP, which is I'm sorry, I've lost the actual terminology of what it is, but if you Google under Mark Bloomberg, then you can have there's a great resource that looks at specific receipting issues. But we won't be going into that in any great detail. In this document, CRA identifies something called the fundraising ratio. And what they've done is that, they've identified their compliance expectations and best practice and all of that, but they've really now provided charities with a measurement of fundraising effectiveness. And this measurement is basically looking at three critical lines. What are your fundraising expenses for the fiscal year? And this is always done for the fiscal year, not for a specific event. So, and for most charities, you can get that on line 5020 of your 3010 information form. So you add up all the expenses that you have that relate to fundraising, and then that would go on basically on the top of the ratio. On the bottom of the ratio are these other two lines, lines 4500, which are your receipted tax, all of the tax receipted donations that you received, which is on line 4500, and then on line 4630 you have your non-receipted revenue that you would get from fundraising activities. So these are the two lines that would be considered revenue. So basically the ratio is really looking at the expenditures divided by the revenues that you receive. Now the CRA recommends that there are certain targets for these ratios. Basically, under 35% is considered to be the acceptable level for fundraising ratio for a charity. And by the Mutart Foundation report, and I'll refer to this a little bit later, they found that about 90% of all charities did operate under a 35% ratio of their expenditures to revenue. If you're looking at between 35 and 70%, then you're starting to look at the fact that, you know, what are the patterns that you've had over the last few years. So, if they look back at your fiscal reporting for the last 3 or 4 years, and they find that you're consistently up in the 60, 70% range, then that's a bit of a flag in regards to kind of consistent practices of high fundraising ratios. And then they're really now looking for a more detailed analysis of why that ratio is high. If it's above 70%, then basically it will cause concern by CRA that there really needs to be some kind of validation about why a charity's ratio is that high. Now, CRA does identify that the ratio might be high for some legitimate reasons. So, for example, the size of a charity does make a big difference. We know from looking at the Association of Fundraising Professionals, some of the research that they've done on fundraising effectiveness over the last couple of years when they were looking at the impact of the downturn of the economy, that they analyzed the number of donors that different charities have lost during that time and found that charities that were under 100,000 in revenue ended up losing almost 30% of their donor base, whereas charities that were over $500,000 in revenue only lost, I think it was about 0.5%. So the size of a charity really does matter. You know, smaller is usually more challenging in regards to, getting some of those, especially some of the larger donations, et cetera, in to help offset the revenue. Causes of limited appeal. If your charity is really focused on providing charitable programs for clients that it's really, there's not a lot of profile for that particular cause, or there's a limited appeal to the general population, then it is going to be definitely harder for you to raise money in terms of the fundraising activities that you have. And if you introduce different donor development initiatives, we know that, for example, if you're introducing a donor stewardship program that's relatively new, or you're now looking at a planned giving program, then we know that, the staffing costs or some of the activities related to those have upfront costs, but the returns for those won't be maybe 2 or 3 or 5 years down the line in terms of increasing the number of donors. So CRA recognizes that this ratio can be high for legitimate reasons. But the ratio does trigger additional review by CRA, so it really does become a flag of concern. And one of the things that CRA will look at, and I'm not going to go through these in any great detail, but CRA in the document identifies a section called Prohibitive Fundraising Conduct, or Indicators of Best Practice, or Areas of Concern. So in the document itself, there's all of these elements that are identified there. We've actually produced this little summary of the concepts that are in this document. And on the left-hand side, we've identified some of the themes that have been consistently mentioned as kind of best practice. Whenever you're dealing with goods and services for any fundraising activity, then you're really always looking at the fair market value. Paying fair market value and not paying more than fair market value. Issue around dealing with an arm's length individual. Arm's length suppliers are basically those suppliers that are not connected to the charity or to either, to the governance entity like the board members or the management team of the charity. So it's, you're not really, your uncle maybe owns a marketing firm, and so you're not really, getting your marketing material done at that particular firm, especially if it's not at a fair market value. So there's a lot of language in CRA's document about ensuring that you're dealing with an arm's length supplier for goods and services. Now, they do recognize that you might not be dealing with an arm's length, because sometimes, we end up with people that we're connected with that actually might provide us with a discount for some of those goods and services. But it is really critical that the documentation occurs as to why you're doing that, so that CRA can reference that, because a non-arm's length arrangement or working with individuals that you are connected to does raise a bit of a flag because of the potential for private benefit that can occur. So on the left-hand side here, I'm not going to go through these in any great detail, but these are issues that CRA has identified as areas of kind of best practice. On the right-hand side, these are issues that CRA has identified as areas of either prohibitive or concerned. For example, if you're dealing with illegal activities that are fraudulent, contrary to public policy, there's new guidelines that are just coming out around spam legislation and the ability to contact some of the individuals that have been a supporter of your organization. So they're talking about, now this isn't in place yet, but things like the do not contact list and those kind of things. So anytime you don't abide by those kind of policy expectations, then that is also a concern. The disproportionate amount of private benefits, and this is again a major concern, where if the benefits from a fundraising activity, if most of those expenditures, the money that comes in for the activity, actually go to a non-charitable third party, then it's almost as if a charity can become a marketing channel for someone else to make money that isn't a charitable entity. So these are some of the issues that CRA identifies, and I'll pull some of these out as we move through, but this is a good document to provide you with a summary of ideas. So just going back to our slides. So what is the fundraising activity planning cycle? We're now kind of moving more into the second phase, or the actual planning phase. It's really designed to assist charities in planning the activities to make sure they comply with the guidance document, and also use the fundraising ratio as an important point of reference. So any of the planning processes that you're looking at, you're always kind of looking at what is the impact of the expenditures that you have, especially compared to the revenues. And so we've really taken the information from these particular sections of the guidance document, like Section 5, Sections 8, 9, and 10, and we try to integrate all of those into the actual planning document. So this is what it looks like. These are the 9 phases of the planning cycle. And what we're going to do is we're going to look at several of these phases in some detail. The second phase here, we'll spend more time on this than almost any other phase, and there's 4 or 5 worksheets that we'll reference in this particular phase, and then we will just simply move along. Again, as with everything that's cyclical, it's also cyclical within each circle. So there's always kind of evaluation when you're dealing with within each of these components as to how you're doing. But we're going to kind of look at the first 3 in some kind of detail, and then kind of summarize a little bit more of these as we move through. Now, the actual reference that we have is this fundraising logic model. So this is available on our website, and basically it's the summary of the model, and this is really what we're working from, and it breaks it down so that each of the subcomponents, so topic number 1 deals with this concept, topic number 2 deals more with the preparing, And so you can kind of follow some of the flow of these elements here. What we've done with this webinar is we're just pulling off some of these topics. But you can reference this document later on, and this becomes a nice way for you to take a look at more detail of some of these issues. Okay. So the first aspect is, is this activity fundraising? Fundraising is anything that has to do with a solicitation of support. We know that there's fairly traditional perspectives on fundraising. We're running a car wash or a gala or a garage sale, or we're selling chocolate bars or things like that. So we're trying to solicit support for our charity by getting either cash or in-kind donations. So those we kind of logically think of as fundraising. So if we're doing a fundraising activity, then basically any expense that is connected to that, this issue down here, will an official tax receipt be issued for someone participating in this activity? One of CRA's guidelines is that if you are issuing a tax receipt, then in fact all of the expenses that are related to that activity are basically fundraising expenses. But there might be other activities that you have where you're not issuing receipts. And again, I think we've identified that earlier, that line 4630, that's an area where you have fundraising activities and you're not issuing receipts, but that is still fundraising revenue, and it is still a fundraising activity, and therefore expenses related to that are still fundraising expenses. Now, all these other activities are also connected to what we call a solicitation of support. So you might be introducing a donor stewardship or a donor recognition program. I know at the college here we just finished a major capital campaign, and so we're spending a lot of money on a donor wall, and a lot of media coverage around our donor, different levels of donor recognition and things like that. So a lot of those expenses, they're all fundraising expenses because they're really dealing with a solicitation of support. And this also includes any kind of research or planning involved for solicitation of support. So any expenses related to that are also need to be considered as part of your fundraising expenses. Now, the sale of goods and services, if the goods and services are being sold to fulfill your charitable purposes, then in fact that isn't a direct fundraising activity. So you might be offering clinics related to some services for clients for your charity, and so any income from those sale of services are not fundraising activities because they connect to your charitable programs. The other aspect that's mentioned is that anything that deals with related business is not considered fundraising activity, either the expenses involved with that or the revenue that you get from a related business. So once you've established that this is a fundraising activity, then we need to look more specifically at how we're planning these activities. Now, one of the large criteria that CRA mentions is that the time spent on developing grants or proposals for, say, government funding, that is not fundraising. That is a separate expenditure line, and again, revenue that you get from any of those funding supports is not a fundraising revenue. We also know that from the MUTAR report that literally about 70% of all of the revenue that comes into charities across Canada are from some kind of government grant or some kind of granting process. But again, a lot of that is focused around more the larger organizations in terms of either health or education. So now that we've looked at, we're now into stage 2, which is the early preparation. So the first aspect of preparation is making sure that you're not doing something that is kind of contrary to CRA's expectation. The second is that as we start to look at assessing what you want to do for fundraising activities for the year, you really need to look at the scope of those activities and making sure that your charity can support the scope of whatever activities you're considering. This CRA's document focuses on the fact that fundraising activities needs to be incidental and auxiliary to a charitable's focus on their charitable programs. So if you're going to try and bite off some fundraising activity that requires a significant amount of support and you only have 1 or 2 staff members, then you really need to be sure that you're not going to put your charitable programs in any kind of risk by deciding to do that. And then the focus is around developing tools to ensure the tracking of fundraising-related expenses and revenues, because at the end, we really need to, the charity needs to be able to report effectively what are their fundraising expenses on lines 50-20, and then the revenues that are on those, especially the 2 lines that we talked about earlier with the fundraising ratio. Now, that being said, CRA does identify that the 3010 reporting document is different for larger charities than smaller charities. Basically, we're looking at charities that have over $100,000 in revenue. Those charities need to complete what is called Schedule 6, and it has a line 5020 on it. Those charities that are under $100,000 in revenue, they fill out something called Section D, and there is no line 5020 on that particular schedule. So it's a little more complicating in terms of having a specific reporting line for fundraising expenses, but charities should be able to establish what are their fundraising expenses through some other tracking processes. So when you're looking at, you're really looking at the next fiscal year, and you're trying to look at, okay, what are we going to do in terms of fundraising activities? The first priority is always, what are the resources that we have? What are the revenue streams that we have from other sources? You know, what are the charitable programs that we're trying to manage and implement? And then what are the gaps? Basically, fundraising needs to be directed towards some identified project or gap in terms of revenue that you have, based, you know, in terms of the revenue that you have and the revenue that you need. It really isn't designed to be a slush fund for a charity. So the first aspect is in terms of what do we need, and then what kind of fundraising activity would be most appropriate for us to get to that point. So I've got a couple of worksheets here that look a little bit more at reviewing the last fiscal year. So the recommendation would be that, again, these worksheets are more in terms of ideas that you could utilize and then modify according to the scope of whatever fundraising planning that you're looking at. So the first part of this worksheet is really looking at what was your fundraising ratio from last year. So you look at the reporting lines on your 3010 and you figure out what is your fundraising ratio. In fact, you could probably look at the last 2 or 3 years to see what those patterns of your fundraising ratios are. And if they're consistently high, then obviously that's something that just didn't happen last year. It's a bit of a pattern that maybe your charity needs to assess. The second step is really looking at some of the expenditures and revenues from last year. So there are some expenditures that, for example, planning processes that you're involved with, that research and planning for fundraising, general marketing and promotion, because fundraising is also when you're trying to raise the profile of your charity, which of course encourages support for your charity. So there might not be any direct revenue from that, but it does often end up with donors that end up for providing support for you as over the year. So you look at the activities with no direct revenue. You look at some of the donor stewardship or recognition initiatives, often that have some cost element to it. And again, you might get some donor revenue from various contributions or commitments to campaigns. And then you also look at the fundraising initiatives. Now, this is much more specific in terms of specific events. So I provided an example there, a gala or a pasta dinner or a silent auction item or a raffle. So these are all kind of fundraising initiatives that you might have run in the past. And we'll look at the gala in a few minutes in terms of an example. So when you're looking at these initiatives, you should be able to look at the expenses and revenues that were generated or occurred from those initiatives. So at the end of it, you have kind of a summary of revenue and expenditures from the last year. So again, this provides you a nice point of reference. Now, with step 3, what we recommend is that you're now looking at what are the activities that we should continue. You know, what went well, basically. What are the activities that we should continue, but maybe we need to modify or reduce some of the expenditures. You know, sometimes you run an event and you end up buying way too many things, maybe some swag that was offered or some other giveaways that really didn't provide a lot of value to the activity, but significantly bumped up the expenses related to that. Maybe you can move it to a smaller venue or whatever. So it's really kind of looking at modifying to make it more cost effective. What are the activities that should be replaced and what activities could be introduced? And so this is a bit of a summary that one can look at. And again, part of our feeling is that this could be a document that could be utilized for the board as part of their oversight. So as you're looking at, you know, establishing your fiscal priorities for the following year, that you kind of look at what happened the previous year and you really assess, you know, the successes and failures or challenges that you had. Now, here's a sample statement from a gala. One of the things that we've tried to do with this is we've tried to identify the top part on revenue. Here's a revenue summary so we've got, here are the ticket sales that we had with the gala. Again, this is a fairly high-level gala. Full price was $220. There's sponsorship packages. And so, you know, when somebody bought a table, then they also get some tickets that would go with that as part of the sponsorship advantage package. We also had other sponsorship like the gold level, silver level, bronze level, and we'd identify all of those elements that were there. We'd also look at other donations that we would receive that were connected to that gala. And then the other part that we looked at were what we called ancillary revenue. The bottom line is that we had people in the building for the gala. And so we've already done a lot of marketing in terms of getting them there and really providing a great experience. So we're adding a live auction, silent auction, raffling off the centerpiece. So when you start to look at that amount of money, you're looking at like $46,000 that was part of almost 1/4 of the revenue from the actual gala. And you could run the gala without these kind of activities, but they really are cost-effective way of adding revenue to an event where you already have attendees there. So we've got the revenue aspect here. Then we start to look at the expenses. Now, the one thing that we try and emphasize with the expenses is that there are labor-related expenses. Somebody's got to do this. So creating marketing materials. In this case, we have a communication officer that does that, and we've basically established that there was about $1,000 worth of compensation expenditures for this person to create these marketing materials. This isn't the production of the marketing materials. This is just the skills of creating the materials and the branding and all of that. contacting and securing attendees. So we had an administration do that, and so that we looked at about $40,000 or $4,000 for that particular expense, because we're dealing with 1,200 attendees and following up and managing the database and getting the invitations out. It took us almost a week to get the invitations out, just in terms of really high-level invitations, 3 parts, and we had a lot of volunteers that were putting that together, but somebody had to manage that whole kind of process. The contacting and securing donations. So, the sponsorship packages and trying to get the donors and sponsors and the raffle items and all of that kind of stuff. So that was, again, part of the responsibility. And then the actual coordinating the event logistics. So there's an event planner that actually spent time, getting everything all together and, creating the signage and working with the venues providers and ordering all of the material that's there. So what we've done here is that's the top part, which is really labor. Then we're into the event, the operations, the signage, photography, the entertainment, the decor, the volunteers, because we had several hundred volunteers that were there at the event, so there was costs related to that. The cost of the bar and refreshments, the gifting for MVPs or VIPs. And so we end up with a financial summary here, which is looking at $110,000 in expenditures, of which $26,000 was basically compensation-related expenses, or so literally 1/4 of all the expenses were related to a staff expense. So at the bottom, you end up with these two numbers. You end up with a number that basically says that we raised $212,000. We had $110,000 as expenses. So we ended up making about $100,000. Now, if you just look at this as a single event, the fundraising ratio on this event is actually more than 50%. So according to CRA's guidelines, that would seem to be a challenge. But CRA reinforces that you really need to look at your fundraising ratio over the whole year, the whole fiscal period, because there might be, and usually are, other significant reasons why you would run an event that maybe has a higher cost to it than, because often you'll end up getting other benefits because of the exposure and profile that you have from running, in this case, the best gal in the Niagara region. So the next part of this is, after you kind of looked at researching options, now we're looking at, are there other viable options that we can consider? And what we recommend is that you consider some realistic scenarios. So this is really looking at you projecting expenses required for the fundraising activity, the tasks that are required by staff, any other costs, like things like licenses and insurance. We sometimes forget, especially with raffles and 50-50 draws and things like that, that there are licensing expectations around there that are monitored by the province or the municipality. There's other non-monetary items of significance, the impact on charitable programs, harmony with the mission and values and priorities of the charity, because some activity might not be in harmony with those values, any risks or liabilities with the method, the culture in the community, the suitability of the activity, other competition for others that are running similar kind of events, the potential revenue versus potential losses. We know that when you try and do something the first time, then often it's a bit of a risk in terms of whether you're going to make money. Now, we know that 3 or 4 years down the line, after you've introduced, say, a new event, then you probably will. But in the short term, you really need to be concerned with how much risk you put yourself in terms of especially expenditures that you end up without necessarily getting the attendees that you might really want. Now, we recommend that you look at this kind of pre-planning worksheet. And now, again, this sheet is, you can certainly utilize it and adapt it. If you're only dealing with $1,000 fundraising activity, then you're not necessarily going to go through all of these, but it's the spirit of these concepts that are really important. So what is the activity that you're looking at? What are the desired outcomes? Like, what are the fiscal outcomes that you want to do? And then what are the non-fiscal outcomes? Because as I mentioned before, that gala might have some significant non-fiscal outcomes that help to profile the charity in different ways, and again leverages other resources that you can access. Then you're looking at the impact, so I'm just going to have to, the potential benefits and risks, and then how do you minimize the potential impact of any significant risk? So again, this is kind of this proactive approach to addressing risks and managing those risks. The third part is, what is the impact on your charitable programs? If you're going to do something and all of a sudden you need to have a staff member who is say a volunteer manager now taking 25% of their time to work on on some fundraising activity, what's going to happen to your charitable programs, and how do you minimize that impact? What are the resources and insights? What do you already have? Maybe you've got some branding material, you've got contact data that you can leverage. What do we know from other charities who are kind of a similar size and looking at similar, have run similar kind of events? What other relevant resources have we found on the internet or whatever? What other partnerships might we be able to explore to kind of share some of the requirements involved? The second page there, then you start to look at the financial considerations. What's the projected revenue for this activity? And so you kind of break it down into, ticket sales, sponsors, donors. What are the auxiliary activities I can run with that particular event? So I'm now looking at the total revenue that I can have for that. Then I start to look at the expenses. What are the labor-related expenses? What are the expenses for marketing and promotion? What are the event costs? So that I can end up with a more realistic projection of my expenses in here. And then I'm now looking at the differences between my projected revenues and my projected expenses. And so I've got more of a more specific analysis of really what is the true cost of this particular activity. Then the other thing that we recommend is that you also add on, will any other labor services be contracted out? If so, why? Are you considering the use of any non-arm's length provider? As I mentioned before, CRA is very concerned about this. And maybe they might provide the best service for you at below fair market value. But you should really document why that is and put that in. And then you're looking at any goods and services being considered from non-arm's length parties. And so what we're saying is that this document here is something that you could now take to your board as part of, here's a new activity, and we've kind of thought about everything that's going to be involved with this, and then the board could kind of have an informed decision about whether this should be part of your planning for the next fiscal year. Now, one of the things that we'd like to one of the things that I've done to help with this process is to really look at activity worksheet. So we've tried to break down the activities into a little bit more detail. So section A is really looking at labor-related costs. So here's activities that are connected to attracting attendees, like maintaining contact lists, creating marketing materials, distributing materials, following up. So how much time is that going to take from a staff person? And once you've decided that, who will do it, and then what is the estimated value of them doing that in terms of their compensation costs? So, securing sponsors, managing the fundraising event itself, managing registration, event setup, all of those kind of things. So it's really trying to analyze all of the expenses so that you're considering all those components. The second part looks at marketing and promotion materials. And then the third part is what we tend to standard look at, is that, here's the food, the drink, the rental, the entertainment, the operations, all of this kind of stuff. So what are all the specifics and the supplier for each of those things, and then subtotal and total cost. So at the end of this, you can get some kind of an idea of what the expenses are related to that activity. The back of this sheet is just simply trying to provide you with examples. So when we're saying creating marketing materials, this is what it means. Okay, so again, this is just a worksheet that can kind of help you to refine what are the expenditures related to your activity. So once we've made decisions and we've established plans for the fiscal year, then it's really important to do the record keeping here. Having the board kind of validate the plan for the next fiscal year, that it goes into the board minutes, so that in fact if you end up with significantly high ratios and CRA might want to take a more detailed analysis of your fundraising practices, then there's some kind of reasoned approach as to why you attempted the activities that you're now considering. And then establishing the budget. So really the last part is, after you've looked at all of these elements, try and look at the fundraising ratio overall for the fiscal year and try and see if you can reduce that to under the 35% by making some strategic decisions. So we're now moving past the planning process. We're now looking at the actual management and supervision of the fundraising activities. So you really need to establish policies to describe what's acceptable or not. And this would include things like pre-approved solicitation scripts and that, so that any staff member or if you do have an external contract fundraiser or professional that you've hired, that you know what the fundraising activity is about, and you're very clear in terms of all of the messages related to that particular fundraising activity. You want to make sure that the receipting guidelines are followed and monitored regularly, because we know that's a challenge. We know that by CRA, some of research that a lot of charities do make receipting errors, and so clarify how you receipt for things, if it's silent auction items or if you're dealing especially with in-kind donations, and making sure you follow appropriate appraisal processes and the guidelines that are there. So making sure that you're assessing, the advantage if someone's at a golf tournament, and you're assessing all the advantages that they receive, so that you know the eligible amount of the receipt, so that you've got those guidelines, and anyone that's dealing with the receipt can follow those guidelines appropriately. And then the recommendation is that, some kind of an internal audit to make sure that you're reviewing expenses and revenues, and maybe you might need to use adjustments. If you see that, you're now only a month away from the event, and you now need to make decisions about some of the other materials that you might have added to the event, but the registration isn't as robust as you'd like, so maybe you need to adjust some of those expenditures to keep that down. So after you've kind of looked at the planning and you're now looking at what we call the actual getting it done. So the recommendation is that to use job design as a way of assigning tasks. So what needs to be done in terms of this fundraising activity? And how do we manage these tasks in the most cost-effective and efficient manner? Again, with the onus being on charitable programs. So how do we allocate staff when we're reflecting on, for example, their existing responsibilities? Maybe the staff that are there just have too much other activities going on, especially that are connected to charitable programs, that it's going to be very challenging for them to take on any additional responsibilities. What maybe needs to go off the table? What are the skill competencies? I know for myself, when I first got involved in the nonprofit sector, I had no skill competencies related to some of like event planning processes and things like that. So I might be highly skilled, as many executive directors are, or that, but they don't necessarily have the competencies to run appropriate fundraising activities. So it's really kind of looking at those and ensuring that any compensation paid to fundraising staff, if you do get involved in either contracted fundraisers or contracting elements of a fundraising activity out, that any compensation related to that is reasonable. So we've identified one of the cautions is to make sure that whatever any of the compensation related to fundraising doesn't exceed fair market value and isn't excessive given the scope of the responsibilities. So if you have someone else in the charity that has major responsibilities for program management, then the compensation for fundraising should be similar to the compensation for someone doing non-fundraising activities that has the same responsibilities. So develop accountability practices to ensure the supervision and evaluation of the fundraising activities. And establish performance evaluation that's not based on basically commissions, or the CRA doesn't indicate that this is unethical, but they certainly talk about commission-based remuneration as being an area of significant concern. And most of the fundraising professional associations, like the Associations for Fundraising Professionals, they clearly identify that there are concerns with any commission-based compensation processes and identify that as an ethical issue. So once you've identified where the staff is going to be allocated, then you're really looking at the gaps. Should we consider contracted services? And there's some advantages in terms of doing that. And I know from working in the areas that I have over the last few years, I'm amazed at the expertise that some of the contract personnel have brought to that. So they're connected to professional efficiencies, networks, resources, and cautions that we just didn't even think about. That this might minimize the impact on charitable programs because they have a defined focus. Based on the contract, that you could really address some of these gaps in a targeted manner. And we've also found that once some of this material has been developed, that you now have some policies or procedures or tools or marketing templates and all of this and databases and things like that that you can now move over to future activities. So I know in the past we sometimes used in Ontario job creation project personnel to have a specific, when we've introduced a new fundraising activity, because there is some funding that's available for those kind of targeted new initiatives. So we've really tried to look at, not only the staff, but where else can we, sometimes there's internships or co-op placements or things like that you can kind of identify a specific element of the fundraising activity and get some targeted support. Now, if you are using a contracted fundraiser, we did pull together a document here which talks about working with contracted fundraisers. And, basically, I'm not going to go through this in any great detail, but it's one of the resources that are there. It looks at, conducting research into appropriate compensation, and, developing accountability practices, issuing a request for proposal, entering into a formal contract, ensuring ongoing management and supervision, ensuring the documentation of the fundraising discussions and decisions, and then also on your 3010 information return, there is some significant information that you need to report on, things like gross revenues and any monies that go to the external fundraiser. But we also know that only 1% of charities in Canada use an external fundraiser, so it's not something that a lot of charities end up utilizing. So this slide just kind of summarizes, the key issues that you should really consider if you are working with an external fundraiser. Now, one of the best practices considered by CRA is the use of volunteers. That the whole issue of mobilizing the resources and expertise of people that are connected to your organization and can really provide efficiencies that are well beyond the expenditures that might be related to a certain activity. So, but they really need to be supported effectively. Although the literature talks about appropriate recruitment and training so that volunteers are very clear about what their expectations are for them, the managing and coordination of the volunteer involvement. We have some excellent tools around volunteer manuals so that volunteers are very clear about what they're doing, when they're doing it, and very clear about their expectation. Recognition and retention is a big issue that to ensure that volunteers feel valued for what they've done. And that you can now have very targeted and focused responsibilities for the volunteers. The result is that you get cost efficiencies. Minimal attrition if you've done this well, because you do get passionate individuals that are your best cheerleaders for the charity, not only for the activity that they're involved with, but also for other activities that you might be involved with. And you get these kind of trained and committed supporters. So CRA really looks at this as another element, that you might have a high fundraising ratio, but if for example, a lot of charities end up reporting or summarizing, that they've had 2,000 hours of volunteer in-kind support, and they even though that's not reported on a fiscal report, it is reported in some of their documentation as an event summary or the fiscal summary at the end of the year, just to validate that charities have tried to offset some of their expenditures by effective use of volunteers. The document also talks about following proper procurement processes. And these are areas where you really do need to look at procurement. Any professional services, any marketing or advertisement related expenses, any event costs like the food, the swag, the entertainment, the rentals, any donor stewardship initiatives. So anytime you're dealing with goods and services, you really need to develop a request for proposal. Again, determine if the goods really provide any real value to the activity. There's a lot of literature about soliciting 3 bids and then documenting the process. Now, sometimes charities have different guidelines. They might have guidelines around providing a benefit to, say, local providers or things like that, so they might not go with the best, the lowest bid. But some of the concern is that that the supplier should have an arm's length, that you really are paying fair market value, and that the compensation is reasonable. So as long as you're kind of following these guidelines here, and you're really looking at if there's any sole source contracts without proof of fair market value, any commission-based or donations going to non-charitable charitable parties, that these are major flags for CRA in regards to procurement processes. Now, evaluating during the fundraising activities, there really is a recommendation that charities do stay on top of fundraising activities. That they look at regular benchmarks. You have committees that if the activity is taking place over 6 or 7 months, then you have regular monthly meetings, that there's other reporting that goes to the board so that you can assess benchmarks, and you can make adjustments if required. so you can reevaluate. And then you could also use the fundraising ratio periodically to see if the expenses are excessive. So it's really a matter of the activity is more than just you plan it and it's going. It's really kind of looking at it all the way through the process to make sure that everything is going as well as it can. These are examples of a post-activity evaluation. Was the fundraising goal achieved? Was the ratio too high? Was the resource allocation proportionate to the scope of the activity? Did you use best practices? Did you stay away from prohibitive or questionable conduct? And sometimes, often in workshops, this becomes a bit of a slippery slope, where you've kind of engaged with a certain practice and it's just kind of evolved into something that's maybe over the line. Not in intention. It's just that as you start to look at CRA's document, you think, maybe I should have been a little more cautious about this procurement process or things like that. Did you follow the guidelines? So these are all issues that you should look at. What was the perception of donors? CRA has a big focus on their website on donor relationships. Like if you look at CRA's website, and I've kind of lost it there. The CRA has they've got 3 entry points on their main page for charities and giving, and one of those entry points is education for donors. So they've got all kinds of materials there on informing donors. So, for example, they got webinars, and they've got 3 different webinars there about what's it all about, what are charities about, what's in it for me, where do I begin. So CRA has a big focus on communicating to donors and informing them about what's happened. So what was the donor reaction to your fundraising activity? Did they get the information that they needed? Did they feel that you really utilized the money that was donated to this activity effectively, and the expenses were reasonable? Tracking fundraising expenses. Any of the accountants that we've worked with really recommend that you set up your accounting record-keeping processes to make it easy to track expenses. Lots of times expense categories overlap, so you might have expenses for charitable programs or administration and management or fundraising. So it's really important for you to know what goes where. So if you're looking at, say, a reporting line like 4810, which is travel, then what travel is related to fundraising, what travel is related to administration and management, what travel is related to charitable programs, so that you can track those expenses effectively, including staff compensation costs. And then you might need to use a proactive strategy for determining what expenses go. And I'll look at an example in a minute here. They also have these rules that I referred to earlier, the substantially all in the 4-part, but these are, I'm not going to go through these in any kind of detail, but basically if you have mainly program-related activities, you can introduce some fundraising elements into that. Expenses. These are expenses or examples of expenses that might be related to fundraising. What I've tried to do here is the first section of these expenses are expenses that are connected to staff compensation. Researching options, exploring contracts, planning and organizing, securing and managing volunteers, creating marketing materials. All of these things here are basically compensation-related expenses. So what happens down here is that if you're looking at, say, occupancy costs, which is a separate reporting line on the 3010, if you have, say, maybe 2 of your 7 staff are fundraising-related staff and the other 5 are program-related, then maybe you need to consider a percentage of the occupancy costs as expenses that relate to fundraising. So because some of these, like, office supplies, the toners for the photocopiers and things like that, some things are obviously program expenses, but sometimes there's these general expenses for running the office that you probably need to consider as part of a pro ratio for expenditures that are fundraising. This section down here is more the obvious, expenses related to specific events, producing marketing materials, basic event costs, mailing, general donor appreciation. All of this is kind of more normal in terms of fundraising expenses. So what we're saying is try and ensure that you look at these other expenses that are up here, because what really hit us was this particular report by the Mutart Foundation. This was put forward last year. And basically, this was commissioned by the Mutart Foundation and developed by Imagine Canada. It's called What Charities Report to Canadian Revenue Agency. And basically, what they've identified is that there is some significant concerns with the information that the Mutart Foundation found, is that basically charities are doing well. They say charities are performing extremely well according to the standards. Only 10% of charities are actually above the 35% fundraising ratio. But they don't have a great deal of confidence in the accuracy of the costs. What they're saying is that there's a high frequency of problems that include simple arithmetic mistakes, errors of omission, logical inconsistencies in terms of the way charities are reporting expenditures. And so, only 27% of charities reported fundraising costs, despite the fact that 84% reported having receipted revenue. And in fact, when you look at some of the details there, basically 66% of all charities in Canada indicated that they had no fundraising expenditures, and we know that that's basically not true. So what CRA is, or what the Mutart Foundation is saying, that our analysis raises significant concerns about the way charities are reporting fundraising expenditures. So all I can, kind of challenge a charity to do is to kind of look at that as part of the planning process. What is the real cost of doing business? And more than likely, the expenditures that are being ignored are the expenditures related to compensation. So again, that's just a little sidebar in regards to this, but a critical component in terms of, trying to try and plan as effectively as you can. So getting into the last couple of slides, CRA is very clear that disclosure is a big issue with CRA, that you really need to make sure that at a minimum that you've disclosed the costs, revenues, practices to donors and prospective donors, that you're really, any involvement with third parties must be accurately reported, and there's a real commitment to accessibility. And here they've identified indicators of a commitment to disclosure. That, yes, you do need to fill out information on your 3010, but you also are making sure that the material is effectively on your website, or it's in some of the summary reports that go out to the community, that that you've really trained the volunteers about the appropriate solicitation messages about where the profits are going, and so everything is really up front, and you're really basically proud of what you've been doing, and you're trying to again encourage confidence in the charitable sector. And so, the use of an independent auditor to ensure that whatever you're doing is accurate and consistent. So, again, that's another aspect of trying to make sure that your fundraising practices are transparent. And finally, making sure that you complete the 3010 in a timely and accurate manner. this does create a fair amount of tension for some charities if they haven't, for example, set up their accounting systems to make the transfer of financial information easy. So it's really important that you've done that, because on this 3010, you do need to fill out 8 or 9 components there that relate to fundraising practices. And so it's really important that when a donor looks at your information return on the charity's on CRA's site, that they can find that information, and this provides more information to them about how you operate as a charity, especially in regards to fundraising initiatives. And make sure that it's signed by a director. It is due within 6 months. And this whole issue about making sure that the board is aware of their oversight responsibility and is involved in approving any of the content. I know that sorry, I haven't got it here. There is material that Mark Bloomberg developed in regards to making sure that charities complete their 3010, because in fact this is the #1 issue as to why charities lose their status, is that they don't get this information returned in on time. And then the second issue with compliance is that it's done with a significant number of errors. So, questions here from Patricia. I don't have a problem with the direct expense documentation. That is relatively straightforward. It is all the additional items that are now considered expenses, and certainly as a small charity, almost all of our fundraising would be over 35% cost. I have real concerns about being on government radar for any reason, in my experience, that creates ongoing unwarranted problems. How can we avoid these problems? I guess 2 or 3 issues here with that. CRA does identify that smaller charities do have more difficulty with having their fundraising ratio under 35%. So, my sense is that there is that's a target, and if you're working towards that target, then they understand that you might be a little higher, as long as you're really consciously attempting to try and control the expenditure component of the fundraising ratio, and that you're not compromising your charitable programs and objects, which is the other key issue. So if you're a small charity getting into some activity that is, say, beyond the scope of your resources, then that becomes a concern, because it takes away from what you're supposed to be doing. What CRA is really challenging charities to do is to really look at the true cost of doing an activity. And I guess it's knowing that. So if you're looking at, say, the compensation costs, are there components of that activity that could move over to, say, volunteer support? And so, maybe it's a matter of having the board actively involved in, are there ways that we can reduce expenditures or staff compensation costs if those are the main issues related to it. So it is a challenge, and I think CRA understands that. But I also feel that they're trying to help educate charities to make them more aware of the real cost of doing fundraising, and just trying to effectively try and control the expenditures that they have. Is there a plan to provide specific guidelines to organizations like hospital foundations or United Ways whose charitable objects are to fundraising? I'm not clear how to draw the line between charitable program and fundraising. Well, all the guidelines that we talked about here, I mean, they do apply, most of them, to private foundations and public foundations. Most of the information I talked about is more related to charities, because you're right, foundations do have different guidelines where they can actually fundraise as one of their objects, which charities cannot do. I'm not totally clear about the guidelines for the foundations in terms of the differences, because I know that most of my time and energy has been spent on the guidelines for just the charities. So to be honest, I'd have a hard time speaking to that. Now, drawing the line between the charitable programs and fundraising, this is where the four-part test and the substantially all come into play, because basically CRA has some language that talks about if the activity would have taken place without the solicitation of support, then in fact it is mainly program related and therefore would be a charitable program expenses. So for example, let's say you're creating a brochure, and the brochure is kind of a 3-panel brochure that profiles all of the programs that your charity has. All of those expenses related to that brochure should probably be charitable program expenses. Now, you might have some fundraising messaging in there, and with substantially all, there's a 10% aspect of that, where maybe up to 10% of the content might be fundraising content, as long as the profile isn't significant. So, for example, if it was 10% right in the middle of the front page, that's a bit of an issue in terms of profile. So, basically, they're saying that as long as most of the messaging is directed towards charitable programs, and your really solicitation of support is only a minor element, then in fact, then most of that is charitable program expenditures. I would only recommend that you look at some detail in terms of the 4-part test and the substantially all, because it provides you with some excellent examples. From Yvette, if you're doing the same event each year, do you have to get 3 quotes each year? First time. Realistically, we've gone through that several times here, because I know we're on our third video initiative, and so we went through 3 quotes the first time. We did similar the second time, and then this time we've basically ended up going with the provider that we've been very satisfied with the first 2. We knew that their quotes were below the other 2 in terms of, and then also their performance and products were at an exemplary level. So basically what I understand with CRA is that they want to make sure that you've followed the process, and if you are making a recommendation for going with a goods and service where you're not necessarily following that, you have a reasoned approach as to why you're not. So for example, with catering, there might not be a lot of individuals that cater to a specific gala in that specific venue, so you might be restricted in terms of the 3 quotes. And you could also reference that you've done extensive research in terms of contacting different providers, and this is why you're doing that. And so I think the issue around CRA is more the documentation, that you have followed some kind of reasoned process, and that you record why you're doing what you're doing. Especially, you might even be involved with a non-arm's length individual, but if they're providing you fair market value and excellent service, then in fact I sense there is some openness to that, as long as there's a due process that has been followed and recorded. I don't see any other questions at this point in time. Maybe I am. No. Okay, sorry. How do you make the determinations about costs and funds raised when you haven't yet held the event? All of this will just be a best guess, right? You really don't know what the expenses or income will be until you've completed, unless you've previously run something based on your estimates. Basically true. I guess what the challenge is to make sure those estimates are as close as possible. This is where one of the recommendations might be to, connect with another charity that might have run a similar event that has kind of the same scope that you're looking at. Because they've already gone through this, and then they might identify areas of expenditures that you haven't thought about. Often you might overestimate the number of attendees, so really trying to make sure that you have some other even some default positions where if the attendance is down, maybe you can cut back certain expenses, through certain targets that, if it's a month ahead of time, you don't get this additional expense component or things like that. So, yes, you are estimating, but there's also proactive ways of minimizing it and having more effective guesses, I guess. You mentioned government-funded project support. Do you have more specific information on this resource? I don't anymore, to be honest. I know that we did have, I worked at the Center for Community Leadership at Niagara College, and we consistently had 3 or 4 people in our office that were called job-created JCPs, or Job Creation Project Personnel. We haven't done that for the last couple of years because we've kind of changed the focus of our activities. But I know that I also do some work in the Atlantic provinces, and I know they have similar kinds of government offsetting. They've got different ways of. I guess you just need to search some of the websites. Unfortunately, I could try and find out some of the stuff. Right now, it just hasn't been something I've accessed for the last couple of years. Is it necessary to charge invitees for fundraising events like dinners? We have found that people give more if they do not charge them. Well, the issue, I guess you don't need to charge for fundraising dinners, but some people try and get around the concept of providing receipts. Basically, if you're running a fundraising activity, then those who are attending are usually getting advantages, like, for example, the dinner. And so any advantage that an attendee gets, you need to be able to take off the fair market value of those advantages in determining what is their eligible amount of the receipt. So if you're, I guess my concern is if you're really just inviting people and asking them for donations, but you're really giving them something and they're really receiving an advantage, that really that's a little inconsistent with the way activities are supposed to be run, where you need to be able to calculate the advantage to find out the eligible amount of the receipt. It's difficult to engage staff under fundraising activities and their general responsibilities. How do manage more effectively? Sorry, I'm having a little trouble understanding that question. I know that I'll interpret what I think. We just went through our planning process for next year, and so we identified our business outcomes for that, and we identified the different activities that we're going to be doing over the next year, and then we tried to build within each of the staff members we have within our office responsibilities related to the different fundraising activities. And then we also had a lead for different activities, so we have a communication lead or an event management lead or things like that, receiving leads, registration leads. So it is difficult in terms of that, but we've really developed planning documents now. But again, because we've been doing these activities for a long period of time, we now have a document that we really kind of look at, and then we just we revise for the upcoming year to make sure that people are very clear about their responsibilities. And then we've also dropped 2 activities off, and because we determined that they required way too many resources. For example, we had gift cards, and so it was very difficult managing those resources for the amount of revenue that we received, and so we decided to allocate staff responsibilities differently. So it's really part of a planning process, I guess, looking at the next year. At what point do you start considering percentage of cost, EP, occupancy, and toner for fundraising? Well, what I understand from CRA is that when you're starting to look at these reporting lines, like occupancy costs, so you've got things like heat and hydro and maintenance and rent and things like that. If basically you have a certain number of people in your charity that are working in that environment and all they do is fundraising, then it might be a reasoned position to say that 10% of our staff are fundraising staff, therefore 10% of the occupancy costs should be considered fundraising expenses. I guess what CRA is trying to get at here is that if you do have a percentage of people doing fundraising activities and fundraising compensation costs, then you should consider some of those percentages in some of your other expense lines in a reasoned way. It doesn't mean it's exactly that percentage, but the issue is that the charity established some reasoned way of determining what that percentage might be. The level of documentation is overwhelming to a small charity and significantly then reduces to accomplish their mandate, since they are not just having to focus on fundraising, but also have to expand energy to document it all. That's true. And again, one of the realities is to kind of look at the scope of the fundraising activity. What I've tried to identify with these Word documents is that they're really designed to be adapted. So, for example, the planning document, to me, if I was looking at energy, I would spend the energy on the planning process, because often, you might spend 5 hours planning something and you're now into a fundraising activity that's going to take 1,000 hours. Maybe if you spent 15 hours planning something and looked at all of the factors, then maybe, in fact, you might not even do it. So it's really, how do you effectively target within your resources where's the best way to impact what you're doing? Because if you're small, you need to make decisions. Imagine Canada just finished doing a survey in February where they looked at the stress level of staff in charities. And it was interesting when they they broke them into different categories, and charities that have between 1 and 4 staff were the charities of most stress. Whereas when you get over 9 or 10 staff, then that stress level goes down significantly. So yeah, we know, over half the charities in Canada have less than 1 staff member. So you really need to kind of, do the documentation that you're comfortable with, knowing that, you really are a charity, and, just have to make some choices as to what can you manage. Okay, I think we're finished in terms of that, so thank you. Hopefully it's... Oh, sorry, I guess there's one other here. Our charity has a budget of under $100,000. What is the impact of a fundraiser that is not successful? Where the cost to create does not justify. No way to know this. Well, first of all, if you're a charity under $100,000, you don't have a line 5020 on your information return. So CRA's main concern is looking at the charities that are over $100,000. Because of the way they set up the fundraising ratio. So, and it's the documentation of it. So your fundraising activity maybe wasn't successful. So, it's did you learn on it? Did you evaluate it? And then did you make some corrections for the next year? So that seems to be more of the issue with CRA, is that fundraising is a learning process that you effectively try and plan, and then you try and correct, as you move through to reduce expenditures for the following year. There's one more here. I appreciate that CRA is wanting charities to be more aware of the cost, but it seems that the guidelines are quite subjective, and that's a concern. If CRA is aware that costs may be more than 35%, but is subjective, that's an uncomfortable position. In addition, if the purpose is to make sure you don't draw resources from programs, the level of documentation that seems to be requested is counterproductive. Is there any way to minimize cost and time and salaries? Well, CRA identifies that the use of volunteer resources is the best practice. I can see some of the frustration that's coming through in some of these conversations. I think there's a couple of issues here. The MUTAR report I think, strongly identified that charities are not reporting effectively their fundraising expenditures. And so because fundraising is a way of life with most charities, then, the credibility of the sector is really important. The MUTAR Foundation did all kinds of surveys on donor attitudes, and donors expect, charities to use those resources as effectively as possible. And so, I guess it's just a matter of, it might be perceived that the guidelines are subjective, but I think underneath those subjective guidelines, I think there's some very strong messages about protecting your charitable programs, about making choices that are going to compromise that, and trying to manage the resources that you have within that reality. And, if the level of documentation is too significant, then, reduce it down to the level where you feel comfortable that you've covered the main issues that are there. I don't know how else to put it from my perspective in terms of that. Okay, so at this time I'll have to sign off. So again, hopefully you found this to be of some value in terms of today, and good luck.